Thursday, December 12th, market analysis. Stan Ehrlich, good morning. I always start out with the stock market indexes, the E-mini usually, and go to futures markets. And I will be tomorrow detailing the Santa Claus rally, when to get in, why, where, and when to get out, why and where, and some potential alternatives that might improve performance on that particular trade or that particular year. And also, I will show you the historical track record. Now, we got overbought on the E-mini. We got up close to the, excuse me, top of this upward slanting wedge and kind of rolled out of it a couple of days down. Yesterday, there was a fairly substantial rally. Didn't really expect that. Didn't damage my opinion or formation or anything like that. And we're a little lower today, but around the high of the day at the moment, but still below yesterday's close by a very small amount. Starting to close above yesterday's high is probably going to start to make a new high for the move up, which is probably going to get back to the top of this wedge. But if we do stay here and start to sink off some more, like I was mentioning yesterday, right smack at the top of the rally yesterday, and it went down a couple, 3 points or something like that afterwards. If that happens again, then I'm still on the right track about a downside move to approximately Christmas, couple of weeks, and actually 2 weeks, less 1 day, 2 weeks. So the downside objective is probably 29, 26, 59, sorry, 59, not 29, 59, 26. Now, I can't rule out something lower, but let's get there first. I also have to look at the way it's acting when it gets toward this bull trend line, which is going to be significantly higher than that in a few days. It's going to be around 59.80. We'll see what happens. Basically, for the indexes, I am looking for highs, which I think we have had, and a move down for a week or two or three, somewhere in that ballpark, 2 weeks on the average, and another move up to new high ground. So this is a correction I'm expecting in a longer term bull market. If you're an investor type, you shouldn't be too worried about this. If you're a swing trader, you could take good advantage of it. If you're a scalper, well, it depends on very short term type signals, day to day, and I haven't got anything for you at the moment. Next, you can see that we came back up very close to the high of the day today on the E-mini, and I should shrink the spacing here a little bit. And not too long ago, we made a very, very minor attempt at new highs. That's it yesterday afternoon at 15:15 California time, which would be 3:15 p.m., 15 minutes after the reopening, the new session. But it couldn't make it, couldn't make it, couldn't make it, and it fell back. Tried a couple more times here. I am looking for new lows today, lower than the low so far, and a perpetuation of the downside swing. All right. We got up close to the top of the pattern, the spider, overbought, attempted to make new high, so far failing, not by much, a little lower than yesterday's low. I need to close below 602 in order to prove that I have the right opinion so that the new lows for a week or week and a half, whatever, start to develop. So that's my first confirmation, so to speak, of my expectations. And now we're looking at the spider 1 minute. Little pennant for the morning. Nothing here that's tickling my fancy. QQQ did close a little bit above. Looks like a potential breakout. You need to have upside follow through on these kinds of breakouts. So far today, we're back in the pattern, back into the upward slanting wedge. And I think it was a false breakout yesterday, to be honest with you. Not quite overbought. We have divergence, new high in price, but not new high in the indicator, the RSI custom relative strength index. I call it ERRSI, which will turn red when we get sell signals. They happen to be the high day right there for a week or so. Great trade. And it will turn green when I get buy signals. Not necessarily the lowest low every time, but hopefully a good signal and good trade, but frequently they are. That's why the strategy was developed to pick the exact high low day, which I do frequently. You've seen it happen lots of times if you've been watching my videos, YouTube's. All right, looking for more downside here. Next, 1 minute. Nothing particularly that interesting about this chart right here. Needs to break, make a new low for the day, and actually needs to break the low made at 12:35 on the 10th, 2 days ago. Next, we're at the top of the wedge, or upside pennant, so to speak. Pennants have a downward slanting top and an upward slanting bottom. They come to a point like a pennant. You got flat bottom, flat top, right triangles, a form of a pennant, and you got your upward slanting wedges and downward slanting wedges, a form of a pennant. And finally, if it doesn't come to a point, you got a channel. They're all sort of in the same family. Anyway, at the top, you would expect it to pull back. It is pulling back. If we start to close below 21,343, then I'd feel a lot more confident this market's going to drop off significantly more. And you got the 1 minute, so I need quite a bit of a break here. We were at the top of the upward slanting channel, this looks like, in the YM Dow. So every single day now from December 5th, we've seen lower highs, a lower high, a lower high, lower high, and a lower low, and a lower close every single day. Marching its way straight down, this is another of the same type of activity. It won't last that much longer. We're getting fairly close at 33, but not too close to oversold. I'm expecting a test of 43,570-ish, and maybe down to the bull trend line, wherever it is at the time in a few days. And there, of course, is your 1 minute on the YM. The Russell basically did the same thing. You got this upward slanting channel, not quite parallel, but also you could say a very, very long-term extended wedge. But it stopped when it got to the top. Overbought conditions and a major historical resistance area and an upside exhaustion gap the day all of that happened. Too bad we didn't get a sell signal, but all these other cutesy things I like to look for happened. And here we are, a new low for the move down. It's been a couple of weeks plus. I think it's going to come down to 2283. Pretty good break. 1 minute chart coming down. Next, bonds. Now, I don't mind that it's dropped off quite this much, 117.18, 117.5 basically, current quote. It is getting closer to oversold, which is what I would like. So I have to allow it to drop off even a little bit more. After all, it did get overbought in resistance. We do have the last shoulder on a double shoulder, head and shoulder bottom. That's the shoulder in about the middle of November. There it is to the exact day, April 25th this year. Those are the two shoulders. The head of the formation was a bullish ER buy signal on the damn bottom of the market, October of 23. And here's your first two shoulders there and there. This pattern says we're supposed to go up to approximately 150 if this giant 2-year double shoulder, head and shoulder pattern works correctly. Looking for a lot higher. Notes. Same story, same timing, same pattern, same everything. The prices are just different. The minimum upside objective of the notes, 126. Now, crude, still between a rock and a hard spot. There's no breakouts up, no breakouts down, no signals, very neutral over RSI, and this could go sideways a little bit more. A little bit more of a downward slanting tinge to this market, and it's the heating oil. So you got to keep in the background, in the back of your mind, basically bearish. So we could get up to this little resistance level and then cold turkey stop, and that's not much higher. We're not close to overbought. We don't have very much to work with. A short term between a rock and a hard spot, but the bias is definitely down. And if it starts to close below 2.12, it's probably going to break down a lot more and get below 2.0. Next, sharp rally the last couple of days here in the natural gas, but other than crossing a bear trend line, which I don't know that is all that relative important, it looks okay, but I may have drawn it just a little bit too low. I think it should be like that. And the pivot point should be brought over to that, high right there, and drop. Well, that's good enough. And dropped a little bit on that end, like there. Okay. Well, we stopped at it on the rally. Good. No new highs for, more than a couple of weeks. But there does seem to be the possibility of a bottom developing here, double shoulder, head and shoulder bottom again. Sorry to say that. There are a lot of them seem to be forming lately, potentially. Okay. The small head and shoulder bottom already worked and only took it 2 or 3 days since the breakout of 3.1 to get up to the minimum objective of 3.6. Real quick. So that's come and gone. But it is that pattern, a baby form of the bigger one. Maybe. I need more time to decide whether this is going to be legit or not. The neckline on the other pattern goes from our sell signal at the rally high to the sell signal on this high, and that neckline is up here at 3.7. So let's see what happens. I'm a little doubtful as to whether this is going to go up a lot, and the upside objective could easily be, somewhere around 4.6. I'll give it a quick measurement. The lowest low, straight to the neckline, you get your little stick here, your measuring stick, at the depth of the formation, and the upside objective in a couple of weeks if it breaks out would be, 4.8. Yeah, possibilities. Next is a bearish engulfing in gold. We're not overbought, came very, very close to being red. If we had only gotten up to 75 or higher, the high RSI was 74.47. Today, it was a little bit higher than yesterday's high, way under yesterday's low. Bearish engulfing, therefore, sell signal normally just because of the engulfing, therefore, and this could be the start of a down move that will get all the way down to 2280. Yep, 2280. So this could be the last shoulder on a head and shoulder top formation. The neckline, I don't like it slanting down that much, but the body parts are there. I got to keep talking about this until it fails or finishes working. We have a brand new today sell signal in silver. It did get overbought at 77.66, today's high RSI. It did have a bearish engulfing. It did stop going up in a resistance area, all of which I love. This should be the start of the turn down that'll get us down in a few days, a week or something, to the neckline around 29.6, 29.5, and break out below that all the way to its minimum downside objective of, let's say, 25 flat, a little under. That's a pretty darn good move. This pattern has not too much wrong with it. I mean, it's almost perfect, not quite. They hardly are ever perfect. There's always some variation on the original textbook type pattern. But here we go. This is it, in my opinion. The fail-safe stop is a tick above today's high. You're going to start to see the STS start to develop tomorrow with the trailing stop, which is already active, but you don't see it on the daily charts. You see it on the 1 minute or 5 minute or something like that. But it's got a very nice day trade profit in progress. It's doing very well so far. ER1 and ER3 both. Last time we had a sell signal like that in platinum, it was the top of the market. Now, we have almost a bearish engulfing, and maybe we already do by a hair in platinum. Too bad it's not a red sell signal, but it does imply, and we're not very far away here, that it's going to come down to the neckline, break the neckline, and my downside objective I've been saying for several days now is 797 or lower. Look at copper. We have a brand new bearish engulfing ER sell signal today. It's red. An outside down day. Now, unfortunately, we got stopped out yesterday of our short and took a nice profit. I'm not complaining about that. And you do have this happen sometimes. You get bumped out at the top of a rally, which you don't want, or you get bumped out of a short at the bottom. That was a short at the top of a rally, or a little downside dip when you're long, and then it keeps on going up. You don't know any better. And trading systems, that's what happens sometimes. As long as it keeps them making money, that is the answer. That's why you like to trade with the system. Next, corn and soybeans, sorry, are still profitable. We haven't gotten stopped out. I thought we might a couple of days ago. There's our stop right there, right around 10:08. And I don't know. There's no trend lately. We're still slightly profitable. I need it to close below 977 and 3/4. Well, let's call it 970 to be safe, below 975. Then it should drop off sharply and quickly and make a new low for a long, long time period, more than a year easily. Looks like maybe close to 2 years. Long-term bear market, downward slanting channel, still in the channel. Watch out for a downside breakout. If it starts to move up and close above 1040, which I do not expect, that's a totally opposite story. You will have upside breakouts. You will have a longer-term bullish pattern started, which hasn't yet. So I favor the downside. Soybean oil, afraid to say the same thing. In resistance, stopped the rally a few days ago, starting to see minor new lows. Right now, a little higher on the day. No bullish engulfing. Very neutral RSI. What's your trend? Basically down, just sideways to down. I'm watching for the 40.50 level to be challenged and broken, and for it to come down all the way to 37 and change. I've got meal doing all of the same things, and this is a profoundly important support area that if we break the lows a few days ago, which tested the same levels, it could fall apart very quickly, very substantially also. And I have to say the same thing about the upside in terms of new highs for a few weeks. That'll change the story, but it doesn't look like that at the moment. I know I've been waffling bullish to bearish, bearish to bullish, and back and forth here, but for reasonable reasons, we've got overbought conditions in corn, and on Tuesday, an upside breakout that looked okay yesterday, a new high, and holding above the neckline. And that's the neckline right there, slightly upward slanted. But today is not good. You are now significantly, not just a little bit, but quite a bit below the neckline, which is a no-no. It's supposed to hold at the neckline. This is if we close here, or even a little higher, as long as it's below the line, or make new lows, even worse. I'm going to have to throw out the great skepticism as to whether this pattern is going to work or not, because I don't like this at all. Not normal, not good. And normally a technician would say, and I'm going to have to say it, this ruins the pattern. I'm back to looking for more of a downside dip, and I may, in the next few days to come, erase all these markings for the head and shoulder concept. Next, we got wheat. Slight new lows, possible broad double bottom from August to late November. Actually, it's December 4th. Need to have it go up more. Starting to slip a little today. Got to start talking about the possible bearish major downside breakout. Long-term trend is still down, but I'm thinking there's chances that some kind of longer-term bullish formation could be developing, but you got to see it work. You got to see it start to develop. You can't trade on hopium, an old one. What do we got? Cattle. upside breakout, new highs for a long period of time. Overbought conditions are not particularly unusual under the circumstances, but you've got to stay above the previous highs, and we're down a couple ticks. So a little rally is needed right away. Today, tomorrow, we dip back into support a little bit. I don't mind if it goes sideways a little bit right here, but it's going to have to make new highs within the next several days without dropping too much. If it drops into this trading range and starts to go below the bottom of it, below 189.72, then you have an upside false breakup, overbought, and it could come all the way down at least to 184 and maybe even a lot lower than that. And we got Miss Piggy. Doji, inside day, up a few ticks. Overbought conditions at a major resistance line did stop it a couple of weeks ago already, a couple of weeks. Even attempt to make new highs didn't work, and it stayed below the line. And I think we're easily going to test 82.85, 82.85, and probably a little bit lower, 82.12. But I'm not ruling out the bottom all the way down to 77. And we're back to the only stock that I'm following because it's got a great long-term bullish 2-year bottom developed. The upside should be a minimum of 134. I'm looking at the possibility of 190-ish and even higher over a long period of time, a year, 3/4 of a year, over a year. E-mini at the moment, still a little lower on the day, high and last. Yeah, it's about where it was when we first looked. You guys have a great trading day and profitable trading to you.